Dilapidated and forgotten, this tyre factory in western Ghana could get a second chance at life. Sites like this could benefit from a Ghanaian government programme aimed at encouraging rubber production in a bid to diversify the country's economy and reduce its dependence on cocoa.
So rubber production is going to go up, and in due course, if we, with the authority, encourage them with good returns on their investment, more and more farmers will be adopting that. And that will mean that the rubber industry, a tire industry, and rubber product industry can survive.
With a factory and a massive plantation, the foreign-owned private company Ghana Rubber Estate Limited, or GREL, has been the market leader in Ghanaian rubber production for the past 50 years. GREL has an established history of helping get local farmers into the rubber business through loans and training. Thousands of farmers then sold rubber back to GREL, as it was the only buyer of raw rubber in the country. But in 2016, after an international depreciation of the price of rubber, some farmers started to sell their produce to other foreign investors.
The only way to reestablish the system, let's say, something working well, is a ban on raw material exportation.
But some rubber farmers fear the potential consequences of GREL re-establishing a monopoly in the country's rubber market, going back to a system that led to lower returns on their efforts.
The government must assist us not to make investors overusers. The rules of the game must be respected so that we all live in common.
The white sap that seeps from these tall trees is already an increasingly important part of Ghana's economy. $93.5 million worth was exported in 2017, up from $52.5 million the previous year. But the farmers whose livelihoods depend on its production will be keen to find out under what terms they will be able to sell their produce in the future, and who to.